Caesar Capital. Hope you're well. It's the 18th of April, 2024, and we are now one day away from the fourth Bitcoin halving. So quite an exciting event for a lot of people. This is my third Bitcoin halving. This might be your first, it might be your second, could be your fourth. I don't know, but either way, quite an exciting event. And a lot of people talking about this. But what a lot of people are also talking about is the potential drawdown, or just as we go into the Bitcoin halving. And there have been drawdowns in the past, and we'll have a look at that in a moment. But there are a lot of sort of quite bearish people at the moment calling for almost a bear market in Bitcoin. So I think the best thing to do is actually have a look at the data, have a look at the facts. I mean, we haven't got a huge amount of data to go on, but it's worth having a look at the average drawdown from each going into each halving and kind of work out what that range might be and what we might expect as a way of drawdowns going into this halving. So, as you all know, every 210,000 blocks, which is sometimes around about the 4-year mark, sometimes it can be a little bit sooner, sometimes a little bit later, but every 210,000 blocks, the Bitcoin code halves the Bitcoin reward rewarded to miners for mining blocks. And that's the first halving event was back in November 2012. Prior to November 2012, Bitcoiners were getting 50 Bitcoins for the block reward. That was then halved to 25 Bitcoins. Then in July 2016, it was halved to 12.5 Bitcoins. So it went from 25 to 12. Then in May of 2020, it went from 12.5 to 6.25 Bitcoins. And that's what the miners are getting at the moment. 6.25 Bitcoins is a block reward. And tomorrow or thereabouts, the block reward will be halved again from 6.25 to 3.125 Bitcoins for a block reward. So this is the deflationary nature of Bitcoin, and this is why it's an excellent inflation hedge, both asset inflation and monetary inflation hedge. But anyway, let's have a look at the average drawdown into each Bitcoin halving, and let's see what that comes out as an average. Because although, as I said right at the beginning, we haven't got a huge amount of data points to go on, but it's worth doing to kind of get an idea of what's happened in the past. What might we expect in the future? At the end of the day, Bitcoin is a very cyclical asset, so it works in 4-year cycles, and it certainly has done so far. And there is a certain cycle and cyclical nature to it. So this sort of discussion might be quite interesting. So this is the first halving back in November 2012. And the drawdown at that point was, as we went into the halving, and I'm talking about not drawdowns prior to the halving, drawdowns, either at the point of the halving or going into the halving. So this drawdown was quite sort of meager, really. Where was it? It was a hint about here. So it was sort of a 9.25% drawdown. So we'll mark that down as 9.25%. Then we had the second halving in July of 2016. This was a bit more of a sell-off into that halving. So, we're very close to the halving here, just a couple of weeks away, and there was a drawdown into it. So let's count the drawdown from the top there to the bottom of that wick, which was let's call it a 40% drawdown. So we'll mark 40% down. And the last halving event, I'm not going to count this COVID low. That was a complete, unforeseen event. It was a black swan event. So I don't think it's worth counting that at all. I think that if Bitcoin if we had not had the COVID crash, Bitcoin probably would have continued to trade in this range of sort of, I don't know, 7 to 10K or so. But anyway, we're not going to count that COVID low because I think that's an outlier. So we'll just count the drawdown that we got as we went in to the halving. So we had our high here, we had a bit of a move up, and then we had a low here. That's probably the biggest drawdown of it. That's 15%. We'll check the other one to see what the depth of that was. That was 12.5. So we'll take the big old drawdown to be more conservative. So yeah, 15%. So we'll mark that down, 15%. So looking at it then, we've got the first halving at 9.25 drawdown. Then we've got the second halving of a bigger drawdown of 40%. Then we've got the third halving of a drawdown of 15%. So let's stick those in to the calculator and see what we get. So we've got 9.25, 40, and 15. Let's work out what the average is. Okay, so the average, or so the average is 21 point. So average is 21.41%. That's here. Then we've got the median, which is quite important, being 15%. And then we've got the geometric mean, which is also important, at 17.7%. So let's take a look at the Bitcoin price chart and work out kind of where we are in this drawdown. So at the moment, Bitcoin's still looking fairly healthy. We've got this kind of range, haven't we? Bitcoin's been trading in for some time now. So we've got and I'm not going to take into account the wicks. I'm just going to take into account where the price closes, candle body close. So we've got this sort of range, or the bottom of this range here, which is about 60K. And then we've got the top of the range, which was a candle body close back in November 2021, which was about 65K, or yeah, 65.5K. And we seem to be at the moment sort of consolidating in this range. And this is very, very healthy and quite normal for Bitcoin. And if you go back in history again, I did a video on this, my last video, you look at the average drawdowns during a bull market, that they're quite deep. They can be up to 30 or 40%. Anyway, back to the task at hand. So so far, Bitcoin has drawn down from this, from its peak at 74.2K down to its low yesterday, at about 59.5K or whatever it was. That was 19%. Okay, so 19.37%. That's what Bitcoin has drawn down so far. Okay, 19.73%. Sorry. Let's mark that in. 19.73%. Now, going back to our numbers on our calculator, we've got the average at 21.41%. Okay, then we've got the median at 15%, and we've got the geometric mean at 17.7%. So a drawdown of 19.76% is very close to the average of 21.4. It's over the median, and it's also over the geometric mean. So there is an argument here to be said that this could actually be the drawdown. This could be the end of it. This could be the bottom of this drawdown. We could, of course, consolidate here for a little bit longer. So, we could come up again, back down, consolidate before we start moving higher. However, we've also got the range. Okay, that's an important number we've got to look at in these averages, because the range is actually 30.75%. So let's have a look at that range. Where would the Bitcoin price go if it were to essentially reach the bottom of that range from our statistics? So 30% down would take us to 51K. So yeah, 30.75. Yeah, so that's about right. Which, interestingly enough, is around about where the support is here and here. This would be the natural area. And of course, there's this order block here. This would be the natural area that Bitcoin might start to move down towards if it were to break this sort of 58, 60K area. So in my view, what I take from this by looking at the past data, and of course we have to accept we haven't got a huge amount of data points to go on, but it's always worth going back in history and having a look at these things. It kind of gives you an idea of what might happen in the future. Nothing ever happens the same, right? But it just gives you a sort of a baseline or a sort of a base area of what you might be looking at. So this is what I see. The best case scenario is this drawdown has completed and we could consolidate further in this kind of range for a little while before we start moving again to the upside. That kind of makes sense of what's going on with the macro at the moment. There's a bit of an air pocket with global liquidity because of taxes and things like that at the moment. So it could be that we kind of range around here for into May, and then maybe June or July we start moving out. So that's the best case scenario. The worst case scenario, I would say, is that we lose this area of support and we drop down and down to about the 52, 51K area. And then we start moving to the upside. Interestingly enough, I think that 52K area is around about where the bull market support band is. Have a look, see if we can plot that in. Yeah, so it's a little bit higher now, the bull market support band, but it's kind of in, you get the idea. It's kind of in this area, and it may well be that if we do break down from here, there's going to be a hell of a lot of orders stacked here, and it just doesn't reach that price, or it wicks there and then comes up. Either way, I think that this was quite an interesting exercise because we've kind of got some confluence here, haven't we? Because a 19.7% drawdown, which is very close to the average 21.41% drawdown, very close to the medium of 15%, the geometric mean of 17.7% is pretty much within this range here, this pullback range. So that suggests to me that, we could be done, or worst case scenario, we are going to drop down to the 51K area and consolidate there. Either way, I'm still extremely bullish on Bitcoin. There's absolutely no reason to be bearish at this point. We've got a halving event happening tomorrow. We've got ETFs now involved institutionally wise in America, but we've also got ETFs in Hong Kong, which are going to be launched, I think, on the 30th of April. Things are moving forward. Things are looking pretty good. And in my view, there is absolutely no need to be bearish. Last thing, as you know, we have quite a popular VIP group. It's only $499 for a full premium membership for 1 year. You get a lot for that. If you're interested in joining the group, check out our website here on the screen. There's a link in the description. You can either email us through the website, or you can reach out to me directly on Twitter, Crypto Caesar, or crypto_Caesar1 with the blue tick. Anyway, hope you have a good day, and I shall all speak to you soon. Thank you very much for listening. Like and subscribe. Take care. Bye-bye.